Hello, class, and welcome to our third lecture series on managerial accounting. And I'm your instructor, Dr. Jamal. So, we were discussing our chapter 2, and today we will finish this chapter. So, we were discussing about the behavior of the cost. In our previous class, we talked about if we want to do some analysis. So, on the basis of behavior of the cost, we discussed that we cannot trust on total variable cost. Why? Because we increase the production or quantity or activities, it also increases, right? If we want to decide on the behavior of these costs on the basis of total variable cost, then our analysis is going to be biased or erroneous, right? And then we find out that what if we based our analysis on variable cost per unit, and then we decide that the behavior of variable cost per unit is constant. So irrespective of our activity, quantity, or production. So whether we produce 1 unit or 2 unit or 1,000 units, our variable cost per unit remain the same. So then we see that, okay, this is quite good. So we will use in our analysis when we make decisions, we will base our analysis based on variable cost per unit. Okay, and then we talk about the other behavior of the cost, which is total fixed cost. Total fixed cost. We said that the total fixed cost is going to be fixed irrespective of our production. Whether we produce 1 unit, whether we produce 1,000 units, our total fixed cost is going to be the same. It remains the same. So we decided that, okay, we are going to base our analysis based on total fixed cost. And then we talk about the average, fixed cost per unit. We talked about that since the nature of the variable cost per unit is changing, it's not fixed, rather it is decreasing. Because the number of units increases, amount is fixed on the numerator, denominator increases, answer is going to be decreasing. The trend is going to be decreasing. And then we say that since of its different nature, changing nature, we cannot base our decision based on fixed cost per unit. And then we talked about the mixed cost. Mixed cost is which has both elements. Some portion is fixed and some portion is variable, right? So today we'll talk about the analysis of mixed cost. Before that one, we talked about that. What is mixed cost? Mixed cost is this is not marginal cost. Remember, this is mixed cost. MC is the mixed cost here. Let me write it down here. Mixed cost is equal to fixed cost plus variable cost per unit, because we talked about that we cannot trust or we cannot believe on total variable cost. So rather we use fixed cost, variable cost per unit multiplied by the quantity. So this is how we come up the total variable cost. And we talked about that fixed cost per unit, we cannot take that in our decision because that is erroneous. So we took the whole or total fixed cost. So this equation, if we can also write it down in mathematical formula as A plus B x is the quantity, A plus bx. So it is the same as total fixed cost plus variable cost per unit. B in this case is variable cost per unit. X in this case of quantity. A in this case of total fixed cost. So you can also write it down like that. Okay, let's talk about our today's learning objective, which is analyze a mixed cost using a scattered plot and the high-low method. So in this case, we are not wasting our time on this scattered plot. Just going to give you a little idea, that's it. We will be focusing the requirement that is the high-low method. So this is not the basically mathematics class, so I'm not going into the graphical stuff and linear stuff. I'm not going into that one. So assume that we have this schedule here in which we have given the hours of maintenance and its total cost, right? So this is the total maintenance cost for the last 6 months from January to June, right? So do we have a mixed cost here? Maybe or may not be, but the question says yes, it has. Why? Because some costs are fixed and some costs are variable. So above certain hours we have a mix. So we have a variable cost, and up to certain minimum level we have a fixed cost. So our total cost is like this one, right? So we see here in January we have higher hours of maintenance and our cost is also higher. In February we have lower and our cost is also a little bit lower, right? So it means the trend is more like variable, but the question says it is in this cost there is a portion of mix and there is a portion of variable and there is a portion of total cost. So let's segregate that one. So if we plot the hours here and the total cost here on the scattered plot method, so we can use the line formula, which is y is equal to a plus bx. So it means if we take a slope of the line, connect the line here, the slope of the line we can find out through b. So b would be variable cost per unit, x is going to be the hours here, the maintenance hour, and a is going to be the intercept. So intercept you can easily find out through this extrapolation here. So it's going to be easy to, you can find out through linear equation as well. So this is just for you, for your you can say that extra knowledge. But our main focus here is the high-low method. So in high-low method, we'll take the highest cost along with its hours, and we take the lowest cost and its hours. So if you see here, the highest cost, if you see here, highest variables are, highest hours are 850, and lowest hours are 450. So you take their high and low. Hours are, highest hours are 850, lowers are 450. What are the costs? So costs are, highest cost according to 850, hours 9800. So 9800 are the cost. When it was 450 hours, the cost was 7400. The cost was 7400. So all you need to do, you need to take the difference. So among the difference is going to be 850 minus 450, 9800 minus 7400. So 9800 minus 7400, answer is 2400, right? And 850 minus 450, answer would going to be 400, right? So this is the cost, these are the units. So cost divided by number of units will give you variable cost per unit. Remember our discussion regarding when we want to base our decision, base your decision on per unit. So per unit based decision is only variable cost per unit. So this rate is given to us as per unit. So we'll say that this is variable cost. So variable cost per unit is equal to cost divided by the hours. So in high-low method, it is change in the highest variable cost minus lowest variable cost divided by highest hours minus lowest hours. Right? Understand? Or should I repeat? Coco, Junpyo, Subhan.
Can you just re-explain it, sir? Like one more time, please.
Okay. So you see here, the method is called high-low method. Pay close attention. High and low. So what is the formula for variable cost per unit? Total variable cost divided by number of units. So let me just write down the formula here. So variable cost per unit, sorry. So variable cost per unit is equal to total variable cost divided by units, right? But we are using which method? High-low method. So variable cost, what is the highest variable cost? Look at this table. What is the highest cost here? What is the highest cost here?
850? No, 9,800.
Cost, that are the hours, okay? So according to 9800, the cost, the hours are 850. So these are the highest, right? What are the lowest cost here? 9100, 76, 82. This is the lowest.